Imagine standing at the crossroads of your financial future, feeling the weight of uncertainty pressing down on your shoulders. The world of investing often seems like a complex maze, a place where only the most experienced or the luckiest succeed. Tony Robbins, one of the most renowned motivational speakers and life strategists in the world, takes you by the hand and simplifies what many consider intimidating. In Holy Grail of Investing, he distills decades of research, interviews with legendary investors, and practical strategies into a roadmap that anyone can follow. This book isn't just about accumulating money, it's about achieving financial freedom, building long-term wealth, and understanding the rules that govern wealth creation. Robbins emphasizes that financial success isn't reserved for the elite, it's accessible to anyone willing to learn, plan, and execute with discipline. He challenges readers to shift their mindset, to see investing not as a gamble but as a structured, scientific approach to wealth accumulation, one that reduces risk and maximizes growth over time. With clarity and actionable steps, Robbins removes the fear and confusion that so often paralyze potential investors, replacing it with confidence, understanding, and a clear strategy that can be applied at any stage of life. This book is not theoretical, it's practical, actionable, and rooted in the real experiences of people who have turned small investments into generational wealth. It also examines the psychology of investing, showing how emotions like fear, greed, and impatience can sabotage even the best-laid plans, and offers methods to overcome these mental pitfalls, ensuring you stay on track toward your financial goals. By the end of the journey, you not only gain tools to build wealth but also cultivate a mindset that empowers you to take control of your financial destiny. Tony Robbins shows that the Holy Grail of investing is not a secret formula hidden in complex financial algorithms, it's a disciplined approach grounded in knowledge, patience, and strategic planning that can transform anyone's financial life. One of the central principles Robbins highlights is the importance of diversification. He refers to it not merely as a safety net but as a strategic necessity in modern investing. By spreading your investments across a mix of asset classes, stocks, bonds, real estate, and even emerging assets like commodities or alternative investments, you protect yourself from the inevitable ups and downs of financial markets. Diversification reduces risk while maintaining the potential for significant growth, allowing investors to weather downturns without panic or hasty decisions. Robbins illustrates this with real-world examples from iconic investors like Warren Buffett, Ray Dalio, and John Templeton, who consistently outperform the market not because they predict every shift but because they build resilient portfolios designed to thrive under various conditions. He stresses that too many individuals make the mistake of putting all their eggs in one basket, chasing trends or attempting to time the market, only to be met with disappointment and financial loss. Through clear charts, stories, and breakdowns, Robbins shows how a diversified portfolio functions like a well-oiled machine, where each component contributes to long-term stability and growth. Moreover, he explains how diversification isn't just about quantity but strategic allocation, understanding correlations between assets, and periodically rebalancing your portfolio to reflect changes in the market and your personal goals. In essence, diversification is the cornerstone of sustainable investing, a tool that transforms uncertainty into opportunity, giving you peace of mind and a clear path toward wealth accumulation. Another groundbreaking concept Robbins delves into is the power of compounding, which he refers to as the most overlooked yet potent force in wealth creation. Compounding is the principle where money earns returns not just on the principal investment but also on the accumulated earnings over time. Robbins emphasizes that starting early, even with modest amounts, can result in staggering financial growth over decades. He uses vivid examples to show that a person who begins investing in their 20s has a dramatic advantage over someone who starts in their 40s, even if the latter invests significantly more money. The mathematics of compounding are simple but profoundly powerful. Patience and consistency are far more valuable than chasing quick wins. Robbins also stresses the psychological component, resisting the urge to withdraw gains prematurely and avoiding impulsive decisions during market volatility. By internalizing the compounding mindset, investors cultivate discipline, long-term thinking, and resilience against short-term fluctuations. The book not only illustrates this principle numerically but also provides practical strategies to maximize compounding benefits, such as automated investment plans, reinvesting dividends, and tax-efficient strategies. Ultimately, Robbins frames compounding as both a financial and a personal growth tool. It rewards persistence, teaches patience, and demonstrates the exponential power of smart, consistent decision-making over time. Robbins also tackles the emotional and psychological challenges of investing, which he believes are often more critical than technical knowledge. He explains that fear, greed, overconfidence, and herd mentality frequently sabotage investors' best intentions. The markets are unpredictable, and emotional reactions can lead to impulsive decisions, selling in panic during downturns or chasing bubbles during booms. Robbins introduces the concept of financial discipline, which involves creating a clear strategy and adhering to it regardless of market noise. This includes setting long-term goals, understanding personal risk tolerance, and developing a systematic approach to buying and selling assets. He shares stories of ordinary individuals who made extraordinary gains simply because they controlled their emotions and followed a disciplined plan, contrasting them with those who lost fortunes due to impulsive, emotion-driven choices. Robbins emphasizes that mastering the emotional side of investing is as critical as understanding asset allocation or market trends. Techniques such as mindfulness, journaling investment decisions, and creating predefined rules for trading or withdrawal can mitigate emotional errors. By combining psychological awareness with tactical knowledge, investors are positioned not only to survive market turbulence but to thrive, leveraging opportunities that others miss while avoiding common pitfalls that erode wealth. Robbins' approach empowers readers to transform themselves from reactive participants into proactive strategists, capable of navigating the complex world of investing with confidence, clarity, and composure. One of the most striking lessons Robbins emphasizes is the necessity of understanding market cycles. He explains that financial markets move in predictable patterns of expansion, contraction, and stabilization. While no one can predict exact market movements, recognizing these cycles allows investors to make informed decisions rather than react emotionally. Robbins breaks down these cycles into phases such as bull markets, bear markets, and periods of consolidation, showing how each phase presents unique opportunities and risks. He also highlights that many investors fail not because they lack knowledge of assets or strategies, but because they fail to anticipate or adapt to these cycles. By studying historical market trends, global economic indicators, and shifts in consumer behavior, investors can position themselves to buy undervalued assets during downturns and capitalize on growth during upswings. Robbins combines this with a principle he calls risk layering, where investors gradually adjust exposure based on market conditions rather than making drastic moves that could jeopardize their portfolio. This approach reduces anxiety, limits losses during downturns, and maximizes gains when the market rebounds. The idea is not to chase every opportunity but to align investments with both timing and strategy, leveraging market cycles as a tool for disciplined wealth creation rather than succumbing to fear or greed. Robbins places significant emphasis on the role of fees, taxes, and hidden costs in wealth building. He explains that even small percentages can dramatically erode long-term returns, making it essential for investors to carefully evaluate the cost structure of their portfolios. High management fees, trading commissions, and poorly optimized tax strategies can silently drain wealth over decades, yet these factors are often overlooked. Through detailed examples and numerical illustrations, Robbins shows how two portfolios with similar growth can diverge substantially over time due to differences in fees and tax efficiency. He encourages investors to consider low-cost index funds, tax-advantaged accounts, and smart rebalancing strategies to preserve more of their returns. This principle underscores the importance of attention to detail, careful planning, and long-term thinking, reminding readers that wealth creation is as much about efficiency and discipline as it is about growth. Robbins also warns against chasing hype-driven, high-fee investment products that promise extraordinary returns but often fail to deliver. By focusing on cost-effective, disciplined investing, readers learn to maximize the compounding effect, reduce unnecessary losses, and achieve superior long-term results without excessive risk. The book turns these technical but crucial details into actionable steps that anyone can implement, ensuring that financial progress is sustainable and not undermined by hidden drains. Another core insight Robbins offers is the concept of creating a personal wealth blueprint. This is a tailored financial plan that aligns with your unique goals, risk tolerance, and life circumstances. He stresses that investing without a plan is akin to setting sail without a map. You may move, but you won't necessarily reach your destination. The wealth blueprint involves not just allocating capital effectively but also setting short-term and long-term goals, planning for contingencies, and incorporating lifestyle considerations. Robbins guides readers through exercises to define their financial priorities, whether that's retirement security, generational wealth, philanthropic impact, or financial independence. He also emphasizes the importance of periodic review and adaptation, as life circumstances change, so must your financial plan. By creating this blueprint, investors gain clarity, purpose, and a sense of control over their financial future. Robbins provides actionable frameworks, such as step-by-step checklists and scenario analyses, that empower readers to build a blueprint that is realistic, comprehensive, and executable. This approach transforms investing from a reactive, anxiety-driven activity into a proactive, strategic journey, providing structure and confidence even in unpredictable markets. Robbins also explores the often overlooked power of mentorship and learning from experts. He recounts his experiences interviewing legendary investors and financial strategists, distilling their insights into practical principles that readers can adopt. Robbins emphasizes that trying to navigate the complex world of investing alone is a major barrier to success. Guidance from those who have already achieved mastery accelerates learning and reduces costly mistakes. He encourages investors to study the strategies of proven leaders, understand their mindset, and adapt their methods rather than blindly copying them. This includes learning how these experts manage risk, approach asset allocation, and respond to market volatility. Robbins also stresses the psychological benefit of mentorship, gaining confidence through knowledge and seeing firsthand how disciplined strategies yield consistent results. Beyond individual mentorship, he promotes continuous learning through books, research, and trusted financial advisors. By combining the wisdom of experts with personal experience, investors can craft strategies that are both informed and personalized, dramatically increasing the likelihood of long-term wealth accumulation. This approach reinforces Robbins' overarching message: financial success is not about luck, it is about knowledge, discipline, and the courage to act strategically. Robbins emphasizes the transformative power of understanding risk and reward, explaining that fear of loss is the single biggest obstacle preventing individuals from achieving financial success. He introduces a framework for evaluating risk not as a vague concept but as a measurable, manageable factor in every investment decision. By quantifying potential downside and comparing it with possible upside, investors gain clarity and make rational, informed choices instead of succumbing to emotional impulses. Robbins illustrates this with examples from diverse asset classes, showing how calculated risk-taking can lead to substantial wealth creation, while reckless behavior often results in avoidable losses. He also highlights the importance of understanding personal risk tolerance, as everyone's comfort with uncertainty differs, and aligning investments with that tolerance is key to maintaining long-term discipline. By teaching readers to embrace risk strategically, Robbins transforms the notion of fear into a tool for growth. His method combines data analysis, scenario planning, and behavioral insights, creating a system where risk is no longer paralyzing but instead becomes a calculated pathway toward achieving financial goals. This mindset shift is essential because it empowers individuals to make bold yet informed decisions, seizing opportunities that others might overlook due to fear or hesitation. In addition to understanding risk, Robbins dedicates significant attention to the role of asset allocation. He explains that determining how much to invest in different asset classes is more impactful than selecting individual investments. Proper allocation balances growth potential and stability, tailoring the portfolio to market conditions and personal goals. Robbins provides detailed examples, showing how a portfolio composed of a mix of equities, bonds, and alternative investments can weather market volatility while achieving steady growth. He also explains dynamic asset allocation, adjusting percentages based on economic trends and life circumstances. By providing step-by-step strategies, Robbins ensures readers can implement this principle without becoming overwhelmed by complexity. He further demonstrates that asset allocation is a living strategy, requiring periodic review and adjustment to maintain alignment with risk tolerance and financial objectives. Through this disciplined approach, investors are equipped to maximize returns while minimizing unnecessary exposure, ensuring their portfolios remain resilient and optimized over the long term. Robbins also explores the critical role of behavioral finance, examining how cognitive biases and emotional tendencies impact investment decisions. He discusses common pitfalls such as overconfidence, herd behavior, loss aversion, and recency bias, showing how these mental patterns often lead investors astray. Through real-life case studies, he illustrates how even highly intelligent individuals can make costly errors if they fail to recognize these biases. Robbins emphasizes the importance of self-awareness and structured decision-making to counteract these tendencies. Tools such as predefined investment rules, checklists, and accountability mechanisms help investors maintain rationality and discipline. By integrating behavioral insights into financial planning, individuals can avoid emotional mistakes that erode wealth, making more consistent and effective investment decisions. Robbins' approach highlights that mastering the psychological aspect of investing is not optional, it is as crucial as understanding financial instruments or market trends, forming a foundation for sustainable wealth building. Another powerful lesson in Robbins' book is the importance of creating multiple streams of income. He encourages readers not to rely solely on a single source of earnings but to diversify across investments, businesses, and passive income opportunities. This strategy not only accelerates wealth accumulation but also provides resilience against economic downturns and unforeseen challenges. Robbins explores a range of income streams, including dividends, real estate rentals, royalties, and entrepreneurial ventures, offering practical guidance for evaluating and initiating each. He also stresses that building multiple streams requires planning, time management, and discipline, but the payoff is financial freedom and stability. By combining this principle with strategic investing, diversification, and compounding, readers are equipped to build a robust financial ecosystem that grows steadily over time. Robbins reinforces that creating multiple streams is not about overextending or taking unnecessary risks, but about intelligently leveraging resources, skills, and opportunities to create